Moving full steam ahead with its trade partnerships elsewhere, with Goyal announcing a big boost to trade with the UAE over the next 3 years during his visit to the Emirates. And we do have another rate decision due today. The Bank of Japan rounding off a big central bank week with no change expected there today amid tariff uncertainty and a looming leadership race in Japan. Good morning, and a quick look now at how Asian markets are shaping up on the last trading day of the weekend. It's looking a lot more mixed for the major indices. In Tokyo, all eyes from the Bank of Japan and their much anticipated policy decision, which will come in sometime within this hour. We are seeing that markets in mainland China and in Hong Kong both also struggling a little bit in today's session, about 10 hours before the much anticipated call between U.S. President Donald Trump and Chinese President Xi Jinping. We did see the Hang Seng open in the red today, but it's struggling to bounce back from those early intraday losses. The Shanghai Composite also down by about a percent. And as we mentioned, out in Japan, the BOJ is set to come out with its policy decision in just a few moments. Let's get to Kaori and Joji in Tokyo for a preview. Kaori, good to see you, and also good to have you on this very important day out there. Talk to us about what we might be able to expect, that is, from the BOJ when they decide to make their policy, set their policy later on in a couple of minutes.
Well, JP, I think no one is expecting them to move on interest rates and tighten this time around, and they haven't moved in the last 4 policy board meetings. But I think the language that Ueda-san, the governor, uses later on this afternoon is going to be critical, because there are 2 things really that make the Bank of Japan's decision, well, even more difficult than they originally were. And one is, of course, this leadership vacuum created by the resignation of the Japanese prime minister. And Japan is going into a leadership race, and to pick the new prime minister, that's not happening until October the 4th. That is the first round. So the Bank of Japan will be operating in a political vacuum. So the Bank of Japan is independent from the government, but both have a mandate of steering this economy. So who becomes the next prime minister, I think, must be weighing on the minds of the governors at the Bank of Japan, because one of the front runners in this race, Sanai Takaichi, has been very fiscal expansionist. She falls into the mode of Abenomics, and she has been very vocal about it as well. She's also a very polarizing figure as well. So there's that political element to this Bank of Japan meeting that makes it particularly interesting. The other, of course, are the issues surrounding U.S. tariffs. I mean, it hasn't been long since officially the rate came down to 15%, but still significantly higher than the original 2.5% for the autos and the auto sector. So the Bank of Japan has been saying, look, we want to see how this is going to play out in terms of corporate profitability, whether it is going to discourage fresh investments by Japanese companies, whether it is going to hamper the wage increase cycle that they've been trying to engineer. So I think those are the things that have been unknown, and that's why most economists are expecting them to stay pat. They do have a chance to raise, of course, again in October. There's no meeting in November. But I think also with the Fed moving this week and the questions surrounding the U.S. economy, I think, well, clearly the Bank of Japan has a lot to mull over today. JP?
Absolutely. And a couple of more minutes before they mull over that possible decision, we'll be back with you later on, Kaori, to figure out what they actually do when the time comes. Kaori and Joshi in Tokyo, thank you so much for joining us, and we'll be back with you in just a little bit. The Indian markets come online in about 40 minutes, and here's what Gift Nifty futures are now indicating. We're coming off of 3 straight days of gains, and it seems that there might be room to rise, albeit not by so much. In fact, we're seeing the foreshadowed gains out in Mumbai, perhaps just a little bit more muted as compared to other days. It's only about, well, let's just see, to do a little bit of math here, about 35 points above the Thursday close. But again, could mean that the Nifty 50 might be on a slow and steady march towards that 25,000, the 26,000 mark if it continues its momentum. We're seeing the Indian rupee also weakening past 88 against the US dollar. Keep in mind that the record low is at about 88.33. It's currently at 88.20 against the greenback. And we're counting down to that conversation between President Donald Trump and Chinese President Xi Jinping, which is set to take place tonight. It's their first conversation since June, with TikTok expected to be front and center. The app's U.S. future hinges on a deal to sell its operations to American operators. Trump was on Fox News yesterday. He didn't give details, but said he's confident that the deal will go through.
My relationship with China is very good. You know, we have a trade deal with them. We had a very good meeting the other day. And it sounds like they've approved TikTok, and TikTok is a tremendous amount of money for the United States.
And President Trump's administration is revoking a sanction waiver on the Chabahar port in Iran. The move is a fresh setback to India's plans to develop the strategic port, which has already been delayed by wider U.S. sanctions. The U.S. State Department has announced that starting September 29, anyone operating Iran's Chabahar port or engaging in related activities will face sanctions. New Delhi and Tehran signed a 10-year contract last year, with India pledging over $350 million for operations and infrastructure. Chabahar is seen as a crucial link to Central Asia and Europe through the north-south transport corridor. Meantime, India's Commerce Minister Piyush Goyal is on a two-day visit to the United Arab Emirates that ends today. Goyal co-chaired the India-UAE Joint Task Force on Investments in Dubai and announced a new trade target set by India and the UAE. The two sides aim to double their non-oil, non-precious metal trade to $100 billion in the next 3 years.
You will be happy to know that we reached the target of 100 billion worth of bilateral trade last year in just 3 years, which was determined during the signing of Comprehensive Economic Partnership Agreement. Today, we have agreed for a new target of 100 billion for trade in non-oil and non-precious material items. We have chosen a few sectors which will gain our special attention to increase trade. One of those sectors is textiles. The entire chain of textiles, home decor, will be covered, and the other sectors are fisheries, leather and leather goods, food processing, and pharmaceuticals.
India is already one of the UAE's biggest trading partners, and Indians form the largest expat community in the Gulf state. Let's bring in Asif Iqbal, president of the Indian Economic Trade Organization, as well as the president of the India GCC Trade Council, to talk to us about why this visit is indeed important. Asif, thank you so much for joining us. Given the fact that that Minister Goyal is in the UAE and India is trying to broaden its trade relations, how significant is this visit of his to the Gulf state in terms of trying to achieve some of those trade broadening goals for India?
Thank you so much. I believe that last night, when Mr. Piyush Goyal arrived here, the talks have been very successful, and they are on the track, apparently. And there has been absolutely no issue on that. And the first part of it has been to focus upon the agriculture sector and the dairy sector. And these are the areas that need to be addressed, because the 25% of the tariff of the first tranche is upon this. And the 25% of the tariff that is there is on the Russian part, the oil part. So I believe that there is a very positive outcome of this meeting, and especially after both the sides have met and they have returned to the United States. I believe that it's a very positive outlook, and there is a very good, there's a very good outcome of this.
Asif, when you look at some of the non-oil goods that India's nominated as possible exports that they can boost to the Gulf state or to the UAE, you've talked about pharmaceuticals, seafood, fisheries, textiles. These are all sectors that have been targeted by the Trump tariffs to varying degrees. Will this be enough to make up for any lost market share from the United States? Because as we know, the Gulf state itself is only about 10.5 million people, and about half of them are actually Indians are actually made up of Indian folks as well.
Right. Now, the agriculture sector and the dairy sector are the only two areas, apparently, and there are also, looking at being in the GCC region, we've just returned from Bahrain, and I see that there is a lot of free trade agreements that these countries have with the United States. And many Indian companies are looking at now coming and presenting themselves in this part of the world, and then trying to have let's say, Make in Bahrain or the Make in UAE kind of a product line, to see that they can take advantage of the tariffs and, at the same time, utilize the labor force that they already have existing in UAE. So that is going to be an advantageous, issue for us. And there are a lot of free trade zones that the United Arab Emirates has promoted now, which are very, very lucrative for Indian manufacturing sector. And we have seen that in the last 6 months, almost 300 companies have come here, and they are looking at various such exposures in the pharma sector and in the dairy and the food processing sector. So it looks like very positive that they can utilize the trade agreements that the United Arab Emirates and the GCC countries have with the United States.
So, Asif, could we see more Indian companies actually setting up, or dare I use the word outsource, some of their manufacturing capabilities in India to the UAE, whether it be pharmaceuticals or textiles, in an effort to try and at least shield themselves from the tariffs? And we've seen that the United States has actually looked at these trends before unfavorably, especially with China using Southeast Asia as a bit of a third channel to avoid tariffs. What are your thoughts on this? And could this actually prove to be risky down the road?
Well, no, absolutely, it's not a risky thing at all because the UAE government, they have got some very friendly policies, especially the areas, new emerging sectors like Ras Al Khaimah, the Raqqa, the economic zone, and you have certain other free areas in Al Quwain and Fujairah. They all are promoting, and the government is really supporting them. The Abu Dhabi, the central government is really supporting these provinces to come up, and it is a great moment for them to connect the manufacturing sectors from India to come to these smaller provinces and then set up. The costs are really very reasonable, and the entry point is really very, very friendly, and they have got some very good policies with regards to the power generation and the costs of these smaller supplementary areas, which really help the Indian manufacturers, especially the small medium enterprises who want to come and set up here. So it is looking very positive that they are going to make UAE a base for setting up manufacturing. And also there is this defense manufacturing and electronics that is there, and Make in Emirates program is very important. And there is a lot of Indian interest in supporting UAE companies in the Made in Emirates program, where a lot of Emiratization is happening, where a lot of locals are trying to get into the manufacturing sector. So Indian manufacturing technology is being utilized, and their knowledge base and the skill base is being looked at.
I asked that question, Asif, because one thing that Minister Goyal also mentioned is that they are aware of how sensitive the topic of transshipments are, which is when you reroute your goods to a country to at least avoid possible tariffs. And he actually said that he's strongly advising Indian companies looking to set up in the UAE to avoid using the UAE as a possible transshipment hub. Could you give us an idea of how much in terms of transshipments actually pass from India through the UAE? And again, going back to the possible risks, if this does pick up, should these ties deepen between the UAE and India?
Well, they are encouraging companies to actually come set up here and start manufacturing right from the start. It's not necessarily, they are not going to be using it for transshipment purpose, because there are a lot of Indian investments and the Indian investors who have in the last 3 years come into the UAE. More are setting up companies, more are setting up manufacturing, and to create a kind of origin, the base of origin of all the products here in the UAE. And it is looking very encouraging because more and more agriculture activity is happening here, more and more activity on especially after the Abraham Accords. There is a lot of other technologies that are happening along with India, Israel, and you have the I2U2 movement that happened there, which is very important for this whole thing, which is the UAE, the United States, Israel, and the UAE government doing things together. So there is a lot of skills coming together. There is a lot of manufacturing coming together, a lot of knowledge sharing that is coming together. And now with the economic corridor, which is the Middle East economic corridor that is happening, so there is a very encouraging response from this particular collaboration. And I believe that the I2U2 collaboration, which started off very progressively, and the Abraham Accords that were signed during the same time, this kind of collaboration and the UAE, United States, Israel, and the India link is going to strengthen. And a lot of skills are going to be put together. A lot of human potential is going to be added, and I believe that it is going to look very positive here.
As we know, Asif, India also runs a trade deficit with the United Arab Emirates. Is the goal of these deeper trade ties also to try and narrow that trade deficit? And if so, is that possible given what you've seen with regards to the developments of Trade Minister Goyal's, the Commerce Minister Goyal's visit to the UAE?
Yes, absolutely, because they are supporting something called the India Mart, the Bharat Mart, which is a specific special zone which is for the Indian companies, which is being promoted for the Indian companies to come. So that shows an initiative by the Indian side as well to promote the UAE, because it is obviously they seem to have some interest in this whole thing where they can support Indian companies to set up in the UAE, and the government is supporting the the people, the Indian manufacturers, and of course our ministries have a lot of advantages and a lot of benefits given to Indian exporters. The Federation of Exporters gives a lot of benefit. The Ministry of Commerce has the marketing development assistance programs which help exporters to go out, especially for the UAE. So now there are going to be creating some more mechanisms specifically for the UAE and the Indian businesses, and it is going to support compulsively. Yes.
What exports from India might get the most interest or demand from the UAE once these trade ties or these trade ties are deepened? As if basically which sectors might stand to benefit the most from increased UAE demand from these agreements?
From the increased demand, you see there is a lot of food processing items that are going to be here, a lot of dairy products that are coming up, and meat processing is happening here. So these are the areas which are really in demand in the UAE and also beyond UAE. So these areas, and then there is also the pharma sector, which is being planned to set up here. But of course, there are some solid regulations that need to be followed because the UAE has some very strict regulations and conditions that enable Indian companies to come and set up in those certain sectors. And also the fact that there has been a very big demand for consumer goods here. We have a very big population of the Indian expats here, and there is also a very big demand for various other countries, especially Africa, which has made the United Arab Emirates its base for a lot of India-African trade that is happening in the UAE. So there is a lot of demand that is coming in from Africa as well. And that is something supporting the Indian manufacturing sector.
As if I'm curious, because as we know, the goal now is to try and boost non-oil exports. But could increased crude oil imports from the UAE also be on the table? And I ask this because India is facing a lot of pressure from the U.S. to try and wean itself or exclude Russian oil imports. And we've seen that, we do know that Dubai crude is quite similar in quality to that of Russian Ural crude. And also, we're seeing the price differential seeming to narrow already. Is this something that might actually happen where we see India shift more towards, say, Dubai crude to try and at least as a way of weaning themselves off of the politically charged Russian crude they're importing?
Well, of course, they are exploring the part, but Dubai, as you know, is a non-oil sector, and it is the Abu Dhabi government which has most of the oil. And I believe that they will all fall in line as per the United States regulations. And there is not much oil being bought by India because it's a bit expensive compared to the Russian oil. So there is a little bit of negotiation that is needed on the pricing. We were just there in Bahrain last night, and I believe that the oil is a little bit expensive from there, so India is not buying. But I think that this is going to happen very soon once things come to a certain conclusion and a settlement.
As if I want to broaden our view now beyond the Gulf region and look at India's own efforts to try and at least deepen ties with Iran. And you, of course, I'm sure you took note of the fact that the sanction waivers on Iran's Chabahar port were removed. And this means that economically for India, their investment there and the potential of this port to help stimulate its trade towards Central Asia might actually be potentially under heat. I mean, how important is this port both strategically and economically for India? And is this going to face significant risk now, given the recent developments?
Yes, of course. The news that we have heard yesterday is that the Chabahar port is, there are going to be sanctions on that one. And I don't think, that the state-run Indian oil that buys from Iran, it is not going to reduce its, reduction anymore. And it is going to continue, and it will live there for a long time now. And the Strait of Hormuz, where the oil is coming from, is a very strategic logistics point. And I don't think that we do have any intentions of reducing the purchase of the Iranian oil at this time. And as you see, our Middle Eastern policy is divided into three circles. One is the GCC circle, one is the Israel circle, and one is the Iranian circle. So Iran is an important factor for our businesses and for our trade. And it is going to be there for a long time in the interest of the Indian side.
Asif, I'm getting news that India actually buys very minimal, if not zero oil actually from Iran. Can you confirm with me if indeed if India does buy oil from Iran? Because we're getting conflicting numbers here that say that there is no Indian purchase of Iranian oil.
Well, no, there is not a major purchase of the Iranian oil coming directly from Iran. We used to have, because of the fact that the trade between these two countries, due to the tariffs and due to the exchange regulations, there were many issues. However, we have been doing rice against oil, and there have been a barter kind of a system that is being worked out. However, the numbers are not much due to the facts of the blockage that is there.
Okay. Asif, quick question, because you did mention the GCC, and I want to talk about the other major economy in the GCC, and that is Saudi Arabia, which did sign that mutual defense pact with Pakistan. And again, could these growing ties with Pakistan perhaps also restrict any goals for India to deepen economic relations with one of the other major economies in the GCC, that is Saudi Arabia?
No, Saudi Arabia has always been a very strong partner for us. And the relations with Pakistan, what Saudi Arabia, yesterday we saw the president of Pakistan meeting, the prince of, Saudi Arabia. And I believe that these dynamics keep happening, and it is in their interest. And those countries have their own interests, just like how India has its own interests. So it does not really disturb. And, our foreign minister and our prime minister has been having very strong relations, and they have been pushing for some very, great positive mechanisms which can help the people. And of course, our relations with these countries are, labor-based, and labor diplomacy is one important area that we are playing. So we are looking forward that there is no difference happening there. And the United States being allies of Saudi Arabia, and India also being good friends of Saudi Arabia, all this is going to be put together. And there are some very interesting developments that are bound to happen in the coming few weeks.
Interesting developments indeed. Asif Iqbal from the India GCC Trade Council, thank you so much for joining us today and helping illuminate the growing but complex trade ties that India has with the Gulf region. And coming up, we will track more news and updates, including a court hearing date for President Trump's tariffs. Don't go away. Welcome back. You're watching Inside India, and here are some of the stories we're keeping tabs of outside of India. The U.S. Supreme Court will hear the case against President Trump's sweeping global tariffs on November 5. The case is being taken up after a lower court earlier ruled Trump had overstepped his authority, and the federal law under which the tariffs were imposed was meant for emergencies. The United States has once again vetoed a UN Security Council resolution calling for an immediate ceasefire in Gaza. The draft, supported by 14 members, also demanded unrestricted aid access and the release of hostages. Washington, D.C. cast its sixth veto since the war began nearly 2 years ago, saying Hamas is to blame for the conflict for refusing to release hostages or lay down arms. And President Trump wrapping up a state visit to the United Kingdom with a meeting with British Prime Minister Keir Starmer. Both leaders hailed the renewal of their nation's special relationship, with the U.S. announcing over $200 billion worth of corporate investments in the United Kingdom's technology, finance, and energy sectors. Let's take another look at how Asian markets are shaping up so far on the final trading day of the session. Again, mixed for the most part across major indices from Tokyo to Taipei. It's a bit of a who's who with regards to which directions they're going. The Nikkei 225, though, once again scaling record highs as we still await the much anticipated decision from the Bank of Japan with regards to monetary policy and the direction at which they want to guide interest rates in that particular country. We are seeing the Chinese markets also a bit split today. The Hang Seng did open this Friday session in the red, but has clawed back and is now holding on to slight gains, keeping its nose and chin above water. The Shanghai Composite, though, still in the red, about 9.5 hours before the much anticipated phone call between U.S. President Donald Trump and Chinese President Xi Jinping. The TAIEX in the red by about 0.8%. Meanwhile, we're also seeing the South Korean Kospi also trading about 0.5% in the red. Well, coming up, we will talk about the shifting global world order and where India fits in. Chan Heng-hee, Singapore Ministry of Foreign Affairs, or from the Ministry of Foreign Affairs of Singapore, joins us next from the sidelines of the Future China Global Forum. Stick around for that conversation. You're watching Inside India. We are counting down to the market open in India, and this is how we're shaping up. A last look of Gift Nifty futures that is foreshadowing perhaps a fourth straight day of gains for the Mumbai benchmark, but gains perhaps a bit more muted as compared to previous days. Only about 50 points above the Thursday close. We are seeing the Indian rupee today also softening once again, 88.19 against the US dollar. Again, closing in on the weakest levels on record, which was at 88.33. So it's starting to test those record weak levels actually. But the rupee also, as we mentioned, looking softer against that greenback. Chinese state-owned SAIC Motors is reportedly looking to cut its 49% stake in MG Motor India. SAIC had tied up with India's JSW Group as part of its expansion into the country, with its decision coming after escalating geopolitical tensions between India and China, and following reports that JSW was allegedly pursuing discussions with rival firm Chery Auto. Local media reports now saying SAIC will not completely pull out of India, and JSW has offered to purchase most of the Chinese automaker's stake, but the two are not agreeing on a valuation. European Union President Ursula von der Leyen saying that the bloc must strike trade deals with countries like India to reduce dependency on the United States. Speaking at a German business leaders conference, she said higher U.S. tariffs are pushing the EU to diversify its partnerships. Von der Leyen added that she spoke with Prime Minister Narendra Modi on Wednesday, and Modi assured her he wants a trade agreement by the end of this year. Meantime, the EU is emerging as one of the economic blocs that Indian companies are trying to expand into in order to avoid higher U.S. tariffs. Textile manufacturer Gokul Das Exports says it is planning to boost shipments to the EU and the UK. The company, which gets 3/4 of its sales from America, warns that Washington's 50% tariffs could make business unsustainable in the long run. To offset the pressure, Gokul Das is expanding production in Africa, where levies are lower. And as companies look to diversify, India's chief economic advisor V. Anantha Nageswaran is optimistic on the U.S. tariff front. Nageswaran says Washington could soon scrap its hefty tariffs on Indian goods and even cut the reciprocal duty from 25% to about 10 to 15%.
Given the recent developments which we see in terms of both countries finding an off-ramp and reaching out to each other, and including the important negotiator being in India in the first 2 days of this week, I do believe that there will be a resolution in the next couple of months on the penal tariff and hopefully on the reciprocal tariff also.
Nageswaran's comments coming on the back of positive trade talks between New Delhi and Washington, as well as a phone call between President Trump and Prime Minister Modi. But despite that optimism, President Trump is holding firm on sanctions against India. On his visit to the UK, Trump spoke of his close relationship with Modi, but stressed that both China and India are facing high tariffs because of their Russian oil purchases. Trump said he is willing to do more against Moscow, but not when, quote, the people I'm fighting for are buying oil from Russia. Chan Heng-hee is the ambassador-at-large at the Singapore Ministry of Foreign Affairs, and she is joining us now from the sidelines of the Future China Global Forum in Singapore. And amidst these very unusual times where we're starting to see multilateralism drift into multipolarity, she's the perfect person to actually speak to and to get insights from. Ambassador Chan, thank you so much for joining us. As we mentioned, this forum, the Future China Global Forum, is happening against this shift from multilateralism to multipolar orders. Is this just an inevitability that we need to accept at this point for the global business community?
I think the global business community understands that there is a new order emerging. The old order, which was there for 80 years, the liberal trading order, is fast being dismantled. And businesses, governments are trying to come up with measures to try to shore up, to try to protect the kind of trading system they had before. And at the forum, I think there was a lot of discussion on what the new multipolar order, which is still in the making, will look like.
And what are some of the things that some of the attendees at the Future China Global Forum, what are some of the things they're saying actually with regard to this, and are they seeming anxious, or are they seeming to find more opportunities in this growing chaos?
Well, you have to understand that Asian audiences, Asia generally does not hyperventilate. You know, when before President Trump was inaugurated, they looked at the potential of tariffs coming with a kind of calm. We were like ducks, you know, very calm above the water, but down below we are paddling. But there's no hyperventilation. But there is a deep concern. There's a concern that in this new polar order that is emerging, what is going to be the new order? Because WTO is being dismantled, you know, the US is no longer a big open market, tariffs are high, and defense, there's no more free riding, which is the American point of view. No more free riding for security. So everyone is getting prepared for that. And in this new order, I think countries in the region, in Asia, Global South, are aware they have to diversify to preserve what they have. You know, find new trading partners, find new arrangements that are minilaterals, plurilaterals, and this is the way to go. For instance, we have RCEP, we have CPTPP, which are Asian trade groupings, and there's talk that CPTPP, which was the original TPP, which America, in fact, also promoted, is now thinking of linking up with the European Union. We're looking for new markets in Africa, in areas we have never been. And I think this diversification is going on for real. But many of us, most of us, I would say, are aware that globalization or re-globalization without the United States is not ideal. In fact, re-globalization without the US or China, really, it doesn't work for everyone. Economic growth will slow, and I think we'll all be the worse for it. And there are no winners in a trade war.
Indeed, there are no winners, and perhaps one of the biggest flashpoints amidst this multipolar drift that we're seeing is the growing tensions and rivalries between China and the U.S. that's been playing out for the better part of the last 8 years. Do you think we're heading for a clash, Ambassador Chan, and which we can only hope remains economic and not militaristic? And is this something, again, that the world needs to just brace itself for as well?
Well, we discussed the U.S. trade agreement and whether there will be a deal. I think in our discussions in the forum today, speakers were confident or optimistic that there would be a deal. And I think in the short term, there's optimism about the U.S.-China relationship. Because I think President Trump wants to deal with China, wants to meet with China, and both leaders really want to stabilize the relationship somewhat. There'll be competition, but they hope for some stability. In the long run, I think you have two powers, two countries that are in competition, each with the other. And this will carry on. And they're in competition over many areas, technology being one of the biggest areas. And each wants to dominate the scene. They want to be number one. Both want to be number one in technology. As to whether there will be a conflict, hot conflict, my sense is that I do not think the United States or China want to go to war with each other. You know, in the recent Shanghai military parade, the message from the Chinese is peace through strength. When Pete Hegseth came to Shangri-La Dialogue in Singapore, he also spoke about President Trump's peace through strength message. I think that both sides know what the other side has in terms of military capability and assets. And I don't think they want to go to war with each other if they can help it. Competition, the struggle will continue in the area of economics, in trade, in investment, in technology.
Mr. Chan, since you're at the Future China Global Forum, we have to talk about the Chinese economy, which has changed quite significantly in the last 10 years. We're seeing it going through a slightly rougher patch of road right now, and there's also that stubborn and painful shift from investment-led gains towards the one that's more consumer-driven. And how are all of these changing dynamics towards the Chinese economy perhaps affecting discussions at the Future China Forum, especially with regards to economic and trade relations between South and Southeast Asia and that of this changing Chinese economy?
Well, we didn't go into that in great depth this morning. This will be tackled, later in the afternoon. But let me say that Southeast Asia, all of us watch the Chinese economy very closely because it really affects the economic growth in our region, and the U.S.-China relationship, trade relationship, really impacts on us greatly. I think we worry that the Chinese economy is a bit slower to recover. The top 5% of the companies, industries, and this is EV, high-tech, deep-sea technology, deep technology, they're doing very well. That's 5% of the economy. The question is, will the 5% carry the other bit, 55, 95% of the economy? That is the question. But I think China has its own dynamic. There are strengths in China that, for us, living closer to the region, to the area, do see there are second-tier, third-tier, fourth-tier cities. There's some growth in those cities, which doesn't get picked up in Western press because most reporters tend to hang around in the first-tier cities and maybe some of the second-tier cities. But it's a different kind of growth. And Chinese, they still have to the Chinese economy has to deal with very high student graduate unemployment. That's an issue for every country. So there are these weaknesses. What Southeast Asia economies are concerned with is that with the U.S.-China trade disputes and your tariff war, with the high tariffs on China, China wants to export most of its goods to Southeast Asia, and we're worried about that.
In some sense, Mr. Chan, just thinking about it, the Chinese economy has been something that's been driven a lot by infrastructure and investment, and again, has found that consumption has been quite challenging. And you think about it, it's a bit of the inverse with regards to India, which still has a lot of infrastructure gaps, but a very, very strong and young consumer base that drives the economy there. Are there lessons, perhaps, with regards to that China and India can learn from each other? Because it seems that one country's issues or challenges seems to be what the other country is good at. What are your thoughts there?
The Chinese culture and tradition, the cultural base, is very different from India. And Chinese culture and the Chinese history and the Chinese political system has worked well top-down. And really, even before the communists came in, China is pretty much a centralized system, and they accept centralization well. Although there's a lot of movement at the bottom, and you find that because, Beijing is far away, the emperor is far away, there's a lot more freedom for, the economies elsewhere, cities elsewhere to do some of their own things. India is actually a very diverse, heterogeneous society. And India's strength is, emphasizing that heterogeneity and emphasizing that diversity. You cannot put India into a straitjacket. Indians don't work that way. Now, China has excelled in infrastructure. India does not develop infrastructure well. And I think each has to learn a bit from the other. India has to build more infrastructure, but also educate the women more, deal with the women better, and that will certainly help in a major way. And they have small little enterprises. So has China. Entrepreneurs in the smaller cities, they do their own thing, their own startups. That's why you have so many EVs, and the EV companies, and the competition is great. But I'm not sure, they're sui generis, and well, India has a much more democratic culture, and China has a much more, centralized culture. So it's hard for me to say what one can learn from the other. Maybe they could mix a bit of both, but it's easier said than done.
Indeed, and also highlights the complicated relation between the two. Ambassador Chan, I wanted to get your thoughts on something that Gautam Bambawale, a former Indian ambassador to China, said about the growing ties between Beijing and New Delhi. He said that China may want multipolarity on a global level, but unipolarity in Asia, meaning that in Asia they have to be in the driver's seat, and that's something that India itself might not be comfortable with, even as they try to improve the ties. I'm interested, as a former ambassador and diplomat, what are your thoughts on that particular layout? Do you agree with that specifically, or do you think that there's more nuance to it than just that framework?
Well, right now, the Chinese will say that they're not interested in hegemony, and they're not like the United States, not like the previous colonial powers. But China is certainly a bigger economy and moving much faster than India. India has a lot of potential. It's another great power in the making. China is a rising power, risen power, and India is a rising power. And one day, I think, the two of them will be in competition with the other much more. China is ahead. It's like the US is ahead of China. And China is breathing down the US neck. There will come a time maybe when India will be not far behind China, though if you speak to different people, they debate and differ on the time frame, how long it will be before India is in that position of breathing down China's neck. And so whilst I think you are right, India will chafe at China's assertion of its powers that is dominance or predominance in the Asian region.
And indeed, the hints at how complicated that long relationship is between India and China that needs to be sorted out as well, and perhaps also smoothened out in some shape or form. Chan Heng-hee from the Singapore Ministry of Foreign Affairs, thank you so much for this. And meantime, we are getting some flashes now from the Bank of Japan. It seems that the policy decision is going to be rolled out slowly but surely. But right now, what we know is that the BOJ says that Japan's economy is recovering moderately, although some weakness has been seen out there. We're still awaiting for the policy decision itself to come out. With regards to the BOJ, but definitely we are seeing if they will be holding off on it. And there we have it, actually, the BOJ making the rate decision. They are maintaining the short-term interest rate at about 0.5%. That's the short-term interest rate target for the Bank of Japan. And the BOJ also decided to start selling its ETF and J-REIT holdings. And as we mentioned, that was the decision. Well, let's get back to Kaori and Joji in Tokyo for more on this much-anticipated decision. Kaori, we finally have it right now. What else can you tell us apart from what the headlines are saying?
Well, it means that the BOJ hasn't moved in 5 policy board meetings. I think this was an expected move, and it's been 8 months since they last raised rates. And although the indications on the inflationary front have been well above 2% for a long time, and we got the latest CPI numbers showing that trend is intact, particularly for food and rice prices, was up 69.7% in the month of August. The Bank of Japan has decided to maintain short-term rates at 0.5%, so they haven't moved since January of earlier this year. And I think there are a lot of factors weighing into this equation, but I think foremost is the political front. There is a leadership vacuum. The LDP is about to pick its new leader because Prime Minister Shigeru Ishiba has decided to step down to take, responsibility for the drubbing the party faced in elections in July. And the Bank of Japan has been saying all along that, yes, it's worried about the impact of higher U.S. tariffs on Japanese corporates, but it wants to see more data and more evidence about how that is going to play out. There's a lot happening over the month of October as well. There's the Tankan, the quarterly survey that the Bank of Japan is coming out with. By the 4th, the LDP They will, by October 4th, the LDP will have voted. I think I want to update on the ETFs because another big part of the BOJ unwind is when it could start selling off its holdings of exchange traded funds, ETFs. I mean, Jesper Cole was saying earlier on this morning that they're never going to do that. They hold 37 trillion yen, a whopping 37 trillion yen. That's more than 250 billion US dollars in ETFs, but they say they will start unwinding those. We're not getting any time frame on this. This could be market moving, but the overall message from them is that the short-term rates are going to remain on hold at 0.5%. I mean, I just want to get back to the political element as well, because one of the front runners in the LDP race is Sanae Takaichi, and she has been all along for fiscal expansion. She is within the mold of Abenomics, so very much against hiking of interest rates. She is expected to speak later on this afternoon, and I think how Mr. Ueda, the governor of the Bank of Japan, phrases his decision today in light of that will be critical. I mean, these are two independent bodies, the central bank and the government, but both of them have a mandate of steering the Japanese economy. So in some sense, they have to have some kind of power balance. So I think those two speeches later on this afternoon will be fairly critical as well. I mean, getting back to the tariffs, I mean, at some point it's going to sink into corporate Japan. It's already showing in some of the export figures, particularly in the auto sector. But I think the real worry is that how it's going to impact investment by corporate Japan, whether it is going to deter momentum in the wage hike cycle that is just beginning here in Japan. And of course, there is the calculus of the U.S. economic growth picture after the Fed moved earlier on this week to cut. I think because most of the exports, particularly the auto sector, the majority of it is bound for the U.S., how that fares and how the U.S. Federal Reserve steers that economy is a critical component when the Bank of Japan decides on whether or not to hike interest rates. I mean, CPI has been well above 2% for a long time now. The overall figure, even discounting the very volatile fresh food factor, was up 2.7%, according to the numbers that were released earlier on this morning for the month of August. And this has been the trend for a long time. So I think the tariffs picture, the fact that the U.S. economic cycle, there's uncertainty there, even though we did get some fairly good guidance from the U.S. Federal Reserve, and the political vacuum, I think, is what I think must be foremost on the Bank of Japan governor's minds. And we will be hearing from the governor himself at 6:30 GMT in a couple hours' time. I do want to recap on the other part of the announcement of the Bank of Japan, which is the unwind on its holding of exchange-traded funds, the ETFs. This has been a sticking point for the markets because it is massive. $251 billion, I believe, 37 trillion yen the Bank of Japan holds in ETFs. So this is a critical component of that. I mean, yields have been moving higher for a while now in anticipation that the Bank of Japan will hike interest rates. The 2-year yields earlier on today hit their highest levels in 2008. The equity market continues to defy gravity. It was up more than 500 points at one point. It's paring back those gains right now, but still 45,510. It hit another record intraday high earlier on in the session. Did take a while for the Bank of Japan to come out with this decision. Usually comes out a little bit earlier, but they did have a lot to mull over. But I think over the next couple of weeks, there is going to be a lot more clarity on when the Bank of Japan will move, especially with the Tankan coming out, and of course the leadership race within the Liberal Democratic Party. JP?
Kari, just to clarify, did you say that's a 66% jump in rice prices in Japan?
69.7 year on year. Massive, right? So even if Shinjiro Koizumi, the farm minister, has been out there trying to advocate for lower prices, it's not really effective.
And definitely not good news for anyone who wants onigiri or ochazuke in the coming months as well. Kaori and Joji, thank you so much for the updates. And just to recap, the Bank of Japan keeping rates unchanged yet again out in Tokyo. Indian markets are coming online. The Nifty 50 today opening in the red, and it seems that recent winning streak for the Mumbai benchmark is under threat. They are about 0.25% in the red, lower at 25,360. Meanwhile, the Indian rupee going the other way, and once again weakening to about 88.23 against the U.S. dollar. India's market regulator, SEBI, is clearing the Adani Group of stock manipulation charges. These were allegations made back in 2023 by U.S. short seller Hindenburg Research. SEBI says deals between Adani companies and other firms did not qualify as related party transactions and therefore did not violate market rules. The 2023 report had wiped out $150 billion of the group's market value before shares recovered. A quick check on stocks of the group, and you can see across the board Adani Groups, from Adani Enterprises to Adani Ports and Ambuja Cements, all doing quite well. Keep an eye out for Adani Power, though, which is doing the best out of the bunch, actually, up by, 6.9%. Well, I stand corrected. Adani Total actually up by almost 10% so far in the first few minutes of trade out in India. Meantime, troubles mounting for Anil Ambani. India's federal investigators are filing charge sheets against Anil Ambani's companies, Yes Bank and its former CEO Rana Kapoor. The CBI says Yes Bank invested over 50 billion rupees in two Ambani-owned firms back in 2017, despite warning flags from rating agencies. Investigators claim the money was siphoned off, a systematic diversion of public funds. Ambani and Kapoor have not commented on these charges. And that's all the time we have today on Inside India, but do keep watching CNBC because Access Middle East is up ahead. Have a great morning and have a great weekend ahead.